All right. Good morning, you magnificent melon heads. Happy Tuesday morning to everybody. Hi, Mom. Hi, Dad. Love you guys. I know you're watching. Hope you guys are doing well this morning in this crazy world that we live in. My God, the world is certainly going to heck in a handbasket, isn't it? Sorry, I don't want to get flagged for profanity and get my viewership limited, so I have to say heck in a handbasket. Nuclear war is becoming a household phrase again. Wow, who had that on their 2020 bingo card? Nuclear war for 500, Alex. It goes nice with the plague, the murder hornets, with Camelus cackle. My God, this decade. And we are only just getting started, folks. It's only 2022. There is 8 magnificent years left in this decade. Wow. So I see we've got all of our YouTube diplomats are awake and active in the chat this morning, solving the world's problems, one argument at a time. Job well done, everybody. We can cancel the wars and everything. Everybody go home. I think we sorted it out in the live chat. Very good. Nice job, everyone. Mike Kathman, sir, thank you very much for your super chat early in the morning. I appreciate the support of the channel, brother. He says, favorite part of my day. Thank you. This is the favorite part of my day as well. Although I'm not a morning person, I struggle with these morning live streams. Stuff just doesn't fire right in the melon early in the morning. I tend to hit my peak in the evening. That's when I do my best work. So that's when everybody else is going to sleep. That's when I'm in my prime. Don't do the morning so well, though. But we must press on. All right, let's shrink my big, fat melon of a head. We're 13 minutes to market open, and let's see. Now, it looked like when I first set up to do this stream that markets were going to open down significantly, but it looks like we've clawed back some of that in the futures. Let's refresh because everything is moving so fast these days. If you blink, you've missed it. Looks like the S&P set to open pretty much flat. The Dow set to open down 100 points. We were looking like we were going to open down 250 a few minutes ago, so we're clawing some of that back. NASDAQ set to open down 0.3% or about 43 points. Russell's actually in the green for the day. Oil, look at that, above $100 a barrel, 100.76 on WTI oil futures. My goodness. Hats off to Economic Ninja. He called $100 oil way back. It wasn't even spring of 2021. He said $100 oil was coming again. And keep in mind, this is when oil was, I don't know, what was it, in like the mid-40s back then? And people were telling him he was crazy. So nailed that call, brother. You were a little bit early, but hey, you know, better early than late, right? Gold looking pretty good, up almost another $20, nearly 1%. Gold has had a good couple of days. Silver, my favorite of the shinies, absolutely ripping this morning. Not giving back any of those gains, although, again, you never know. However good precious metals looks in the morning, you got to get past that 9:30 window, 9:30 a.m. Eastern time, because you just never know when the bullion banks are going to dump 1 billion ounces. They can do it anytime they want, and the regulators let them get away with it. They even encourage it, from what I understand. So, again, no move in silver is safe, but we are going to talk about that because I finally pulled the trigger on some silver. I've been talking about it for a few weeks, and I finally saw something in the charts that I liked yesterday. And I made an order on silver, so we'll circle back to that in a little bit. Check out bonds. This, folks, is your classic flight to safety going on in markets. The 10-year Treasury bond, the yield is down below 1.8%. We were talking about 2.05, what, a week ago? Look how fast that happened. We've given up now almost half of the gains for the year in 10-year Treasury yields. So this is, folks, this is people in markets panicking. This is money looking for a safe haven. And so they're parking it in U.S. Treasury bonds, which is considered, you know, one rung just above precious metals on Exter's pyramid for the safety of assets. Treasury bonds are all the way down towards the bottom there, just one above gold. So you've got people are flooding into U.S. Treasuries. People are flooding into U.S. dollars. And I know, you know, with inflation and with fiat currency and debasement and money printing, a lot of people think cash is trash. Well, yes, that's true. Dollars are losing their value at an extremely fast pace. But remember, Forex and currency exchange is a contest of idiots. And right now it looks like the dollar is the best of the idiots because all the other world currencies are selling off even faster. So you've got people are dumping their currencies, their rubles, their lira, all these other currencies that are inflating away, and they're flooding into the dollar that's driving the dollar higher. Now, keep in mind, even though we're seeing the Dixie head higher, we're still seeing commodities rip even higher. So that's very, very bad news for the global economy when you see a strengthening currency and rising commodity prices. Very, very bad news, folks. Okay, so we're going to keep an eye on that. Let's take a look at the commodities markets real quick. Looks like gold up 1%, silver up 1.5%, platinum up 1.6%, palladium up 6.3%. Again, palladium is just ripping. And I don't know if Rochelle is in the chat or not right now, but Rochelle has sent me an offer to talk about palladium. I guess she follows those markets pretty closely. Rochelle, send me an email. If you get this message, let's talk. It turns out it's either Ukraine or Russia. I believe it was Russia supplies most of the world's palladium, and that might be an explanation for why palladium is ripping like it is right now, at least significantly more than all the other metals. But keep an eye on that one because that's an important, in electronics and automotives, palladium is an important metal. So crude oil now at $101, up 5.6% today. That's those sanctions on Russia's bank. And now, keep in mind, a lot of the sanctions on Russia's bank, I'm hearing a lot about how the Russian banks may have been, or Russian energy may have been carved out of these sanctions. Well, no, somebody forgot to tell the oil markets because the oil markets are trading as if Russian oil is off the market all of a sudden. Natural gas up a little bit today, only about 1%, but it's that Dutch TTF gas that I want to keep an eye on. And here we are looking at, make sure you guys can see and that my melon's not in the way. You can. Dutch TTF natural gas futures. This is the benchmark European hub. Is trading up 11.4 euros today. So we're seeing a big move. It's about 11.5% in Dutch natural gas futures. And again, the Russian gas still has not shut off. Okay, these moves in price is just on the threat or on the concept of the gas being shut off. It's still flowing right now. Okay. They've announced the Russians being booted from the SWIFT system, but they haven't actually been booted yet. And I want to draw your attention to this article that popped up about an hour ago in Reuters. It says SWIFT says it's waiting for the names of Russian banks to disconnect. And I was pretty surprised when I saw this because I thought this was done Sunday night. I thought this was a done deal. I thought the Russians had already been cut off from SWIFT. They haven't. All right? We've only said we're cutting the Russians off from SWIFT. So if you guys are sitting here saying, okay, it's been 2 days and everything hasn't broken yet, I guess we're okay. That's not the case, folks. They still haven't been cut off. We've just told them we're cutting you off. But the banks are still trading. They're still sending money back and forth. So just reading a little bit out of this. This is dated today. SWIFT said on Tuesday it was waiting to see which banks authorities want disconnected from its global financial messaging system as sanctions in response to Russia's invasion of Ukraine are rolled out. We will always comply with applicable sanctions laws, SWIFT said in a statement on Tuesday. We're engaging with these authorities to understand which entities will be subject to these new measures and will disconnect them once we receive legal instruction to do so. It hasn't been done yet. That's huge. I couldn't believe it when I saw that this morning. And, I guess mea culpa, I probably should have gone and verified that already, but I couldn't believe it. They've only been jawboning, folks. They haven't actually done anything yet. So all these moves, the big drop in the ruble, the Russian markets collapsing, all this running commodities, this is just front running of the trades. So we still have no idea what's going to happen. None. That was I was really, really surprised to see that this morning. And look, this is the ruble. Look at this chart. Let's get my melon a little smaller here, get out of the way. Look at the drop in the value in the ruble yesterday. Lost almost 30% of its value against the dollar. And I mean, think about how would you like to be a Russian civilian, have all of your life savings in rubles in the bank, only to watch this happen. 20% of your life's work just evaporates. Up in smoke, gone. It's a shame. It's a shame. This is people's lives being destroyed. I hate to see this. I hate this. Nobody deserves this. All right, let's let the idiots who start wars sort it out in the ring. Leave the rest of us out of it. Wouldn't that be great? The wars were fought by the a-holes who started them. And here is the MOEX. That's the Moscow Exchange. This is the Russian stock index. And again, same thing as the ruble. Look at that drop yesterday. And again, folks, I just want to emphasize, this is only on the news. This hasn't actually happened yet. The Russian banks have not yet been booted from SWIFT. So this is just the fear of them getting booted for SWIFT. We still don't know what's going to happen. All right. And look, there's a lot of people who are out there theorizing that this will happen and this will run up and this could happen. Oh, they'll just trade with China, or they'll just do this, or they'll go with Bitcoin, or they're settling gold. All of these theories that are out there, they're all very plausible, and there's supporting evidence for any of them. But you know what? Nobody knows. There are so many backdoor, interconnected, leveraged, derivative, who knows what's is out there, that nobody can sit there and tell you with any kind of supporting math or documentation or anything that says this, and this are going to happen. For sure. Nobody knows. There's never been anything like this to happen. Yes, there have been wars before, but wars on this scale have never broken out during a time of such global interconnectedness economically. Wars have never broken out at a time when information flows so quickly, when the system is so highly leveraged, when the supply chains were already so strained and stressed. Nobody knows what's coming out of this, okay? And I'm not trying to be fuddy here. Again, Jack's got his tinfoil hat on, all right? I get it. You know, I'm the perma-bear type. But, folks, be ready. Be prepared for this, all right? There's a couple of things that, if you're watching this right now, besides, taking care of your investments and things like that, step back into the physical world for a second, folks. Do you have some cash available? Some hard currency? Do you have fuel in your tanks? Do you have some gas cans filled up? Do you have a supply of food? Just in case, all right? Just in case, because nobody knows what is going to happen, all right? This banking crisis, right, has not started yet. And I just want to emphasize that. There's been a run on the banks in Russia, but the Russian banks have not been removed from SWIFT. So we still don't know what's going to happen when those Russian banks finally do get removed. All right. I have a couple of ideas. I think a couple of other banks, say European banks, are going to have a lot of assets denominated in rubles, or a lot of bonds or debt products from Russian companies that are going to go to zero because they're not going to be getting their interest payments. All right. So that means that they're going to have to pull from their reserves to offset those losses, and they're going to have to tighten up their lending. That means liquidity crisis starting. I don't know how fast it'll happen. It could happen overnight. It could take a few days or weeks, all right? But I see the spillover from this. I see a liquidity crisis starting in the European banks and spreading to the U.S., all right? That's my version of how I see this playing out. And again, I can't show you the math to back this up. A lot of this is just feeling my gut and piecing this together based on articles and information I've seen and read. That's how I see this playing out. I don't think my idea is any better than any of the other commentary that's out there about how this might play out, to be honest with you, because nobody knows. There's never been anything like that. Now, the one reason I think this starts in Europe and not here in the States is because of these reverse repos, this just under $1.6 trillion liquidity cushion that we have here in the States. This is excess cash that our banks have in the system. This is our money in checking accounts and money market accounts, all right? And there's so much of it that they're parking it overnight at the Federal Reserve every night, about 1.6 trillion of it. And as liquidity gets tighter, as the banks in Russia are cut off and the effects start to spill over into Europe, again, this is my theory here, and as European markets get tighter, it's going to start resulting in tightening over here in the States. And you're going to see this start to dry up, I think, pretty quickly. I think we'll see this dry up pretty quickly. Maybe it takes months. I don't know, folks. Again, there's no model for this. There's no example. There's no precedent. This is all new. Okay, this is just how I see it playing out. Mike Kaufman, sir, thank you again for the super chat, for supporting the channel. He says, all I know is the average person is going to get hurt. Yes, the average person is going to get hurt. We're already feeling it, folks. Anybody who's filled up their gas tank, you've already been hurt by this. All right? Watch your utility bills. Can you, if you're watching this, do you have enough room in your monthly budget for a 30 to 40% spike in your utility bills and your fuel transport costs? Do you have enough room in your monthly budget for a 30% spike in your grocery bills? Right? These are the things you should be thinking about right now. Where's that money going to come from? Right? And then what does that look like in aggregate across the whole world? My personal take, I wouldn't go anywhere near things like hospitality, cruise lines, right? Stocks that have already taken quite a beating from the pandemic. When it gets too expensive to heat your house, to power your house, to eat, what's the first thing that gets cut? Luxury items and vacations. I don't think people are going to be taking many vacations anytime soon. That's just another one of my theories. Not investment advice, not a financial advisor. Do your own research, your own DD, decision right for you based on your unique situation. Another thing I just want to point out, here's corn futures giving back some of the gains this morning, but now $722. Geez, if only somebody had seen this thing coming. I know a lot of you guys were like, yeah, Jack, back in November and December, like, we get it, the corn thing, it's getting boring, it's getting long in the tooth. Well, here you go, folks. The situation in Eastern Europe playing out like it is one of the parts of this trade that I had in mind. And again, the fertilizer, the corn trade and the corn story that I've been following had more to do with fertilizer than the prospect of war in Europe. The prospect of war in Europe was just one aspect of that trade. But the fertilizer thing, folks, keep in mind, natural gas is the main input to fertilizer. Well, Europe, they are not going to be making much fertilizer anytime soon. All right, because with the cutoff in SWIFT and the sanctions back and forth, something is going to happen to Europe's energy supply. They're trying to carve out energy, but at the rate things are escalating, I think it's almost a given that this Russian gas is going to stop flowing into Europe. I think it's almost guaranteed at this point. Europeans aren't going to be making much fertilizer. The Belarusians aren't going to be exporting any fertilizer. China and Russia already stopped exporting fertilizer. Price of food is going up, folks. It's going to get expensive to eat. Mark Schwartz, Stump Grinding, sir. Thank you very much for the super chat, for supporting the channel. I appreciate that. Speaking of Mark Schwartz, Mark, I know you did pretty well in that LNG trade. I took a little bit of profits this morning in LNG. I was looking yesterday. The RSI was getting a little overheated in this one. Let me make sure you guys can see. You can. I took some profits at 135 today. I only trimmed about a quarter of my position in LNG. And I still think this one is going higher. That's why I only sold a quarter of my position. But I came down here and I looked at the relative strength. It's now in the high 70s. And it's going to gap up, in the next, well, I guess it did open. Let's refresh. Let's see what we've got. Market's now open. Yeah, the RSI is now 77. I thought it was time to take a breather. So I sold a little bit at 135 pre-market. We're already down 133. So it looks like that was the right trade. I probably will be looking to get back into this one to buy those shares back that I just trimmed. If I see this RSI come back down anywhere, say, in the high 50s, I'll probably buy some more of that one. But again, Mark, thank you very much for your support of the channel. I had a price target of 130 on this one. I have to sit here and really think about it to see where I think it goes from here. Again, with everything going on, the Russian gas, I think it's just bound to be cut off at some point, and that means U.S., Qatari, Australian LNG is really going to be Europe's only lifeline for energy. And it takes years to build out new energy infrastructure, folks. The situation in Europe with the energy markets is not going to go away. It's not going to go away overnight. It's going to take a long time. All right, markets are now open. Let's do a quick refresh on our charts here and see what we've got. S&P down 9 points or 0.21%. The Dow down 140, just under 0.5%. Looks like it wants to rise, though. And the NASDAQ is down about 0.2% or 27. So the market's relatively tame, down a little bit today, but not really any big moves. Crude now at 101, gold 1920, and silver at 24.75. And the U.S. 10-year is now at 1.77. Now, we mentioned silver, folks, and I want to talk about this one because I have been following this 200-day moving average for a while. I don't know if you remember, I did a video a couple of weeks ago when silver had broken above its 200-day moving average, or it was threatening to, and I said I wasn't going to buy any silver or make any silver minor trades until I saw a move above the 200-day moving average, a back test, and then a move higher. Well, we just broke above that 200-day line, and we failed the back test, and that was at around 2470. And look, we came all the way back down into the low 22s. All right. So then we started climbing again, and I was saying I didn't want to do anything until I saw that move above the 200-day moving average. We had that big run on the 24th. Boom. Sell off, slam down, failed the back test. Again, I still didn't buy it. Well, yesterday, after a move above the 200-day moving average on Monday, I saw a successful back test. It held. So last night, I got in. I bought some call options in SIL-J. That is the Junior Miners, Silver Junior Miners ETF. I like the miners ETFs because it spreads out my risk. I don't have to do nearly as much DD, research every individual mining company, the CEO, what their deposits are, what their pounds per ton are, or ounces per ton of silver, what is the geopolitical risk in that particular region, all that stuff. When you go with the ETFs, you don't get the home runs, but you can also spread out your risk, and you don't have to spend months at a time doing your DD. You can play the averages. Again, not a financial advisor, not financial advice, do your own DD. But I bought some call options in SIL-J yesterday because I saw that back test and I saw it hold, opening up higher today. Looks like silver wants to run, so we'll see if that trade plays out. And again, if we stay above that line, I don't see a lot of resistance above us. And with this flight to safety that's going on, I think this is a good trade. And again, you never know, though, with precious metals. The bullion banks could come in any day and just smash the price down. So I made a small trade. I eased into the position, didn't bet the farm on it. And Mark Schwartz, again, thank you, sir, for the super chat. Really appreciate the support, brother. And congratulations again on those LNG calls. All right, real quick, let's take a look back again at the commodities and see what we've got going on. Gold still up 1.1%, 1922. Silver, looks like silver's giving back some of its gains now, up 47, almost 2% now. Silver's doing pretty well. Palladium continues to rip, up 6.5%. Platinum behind it at 1.2% up. Still, folks, that's a lot of green. I don't see much red in commodity markets right now. Strengthening currency, commodities going higher. This is not good for the inflation story. Not good at all. Natural gas up 1.6%. Base metals going up too. Nickel up 6.4%. That's interesting. And then look at your grains. U.S. wheat up 5.3%. Corn up 5%. Soybeans up 3%. Soybean oil up 4.9%. Not good, folks. It's getting more expensive to eat. All right. We talked about LNG. We talked about corn. Another couple of trades I've done is I have bought these ETFs that track the price of oil. ERX is one of them. I own call options in ERX. We're now getting pretty high up there in the RSI. We're in the high 60s. I have not taken any profits in this one yet. If I see this RSI break into the mid 70s, I'll probably start trimming my position. But for right now, this one's doing pretty well. I'm going to leave that one in place. I also own call options in XLE. It's another ETF that tracks the price of oil. Similar holdings in XLE to ERX. ERX is a 2x leverage, so there's a little more derivatives. It's a little more volatile, but it's basically the same basket of companies. And this one is at 71.18, up about 0.8%. Again, the RSI still tells me this one has room to run, so I'm staying in this one for the time being. So my strategy really, it remains centered around commodities, precious metals. I'm selling stocks. I'm raising cash. And for the time being, I'm going to continue with this trend. I've been doing this pretty much in this mode since the fall. It's been doing all right, and it's starting to pay finally. So I'm going to let this one play out for a while. Again, not a financial advisor, not financial advice. And last but not least, folks, I would be remiss if I didn't mention we are now just days away from the Ninja Nation Speak Freely event in Dallas, Fort Worth. I am going crazy over here, making preparations for my talk that I'm giving on China Evergrande and what it means for you. And there's now this whole other dimension to the Evergrande story. Now that we've got Russia's banks potentially involved and how this whole new parallel Eastern Bloc economy appears to be springing up out of nowhere. So I have been, if I have some bags under my eyes, it's because I'm putting in some long days trying to get videos made, trying to keep up with my own trades. I have a day job, trying to get ready for this Dallas event. So, Yeah, there's a lot going on over here in the Gamble House right now. But I look forward to this event. There are still a few spots available. So I put a link in the description to this video if you want to check this out. There's a few spots there. You've got the Economic Ninja, Joe Brown from Heresy Financial, Bill Holter, myself, Chris Taylor from Financial Fitness. So many other folks will be there. I can't name them all. Some folks from Wall Street Silver will probably be in attendance. A couple of surprise names also that we haven't advertised that may make an appearance. We don't know. So again, it's going to be a great time. I hope to see some of you guys there, and there is a link in the description for this event. And again, at an event like this, there's a lot that we can talk about, and there's a lot that we can say that we just can't get into on YouTube. When you're a YouTuber, you have to be careful. There are certain words and things that the algorithms will flag you, and they will boot you if you say it. Well, at an event like this, we don't have any such restrictions, so it will be a little more raw, a little more uncut. And again, times like this, with everything is moving so fast, I think this is a pretty good time to build out your network and to meet more like-minded people and to bounce ideas off of them. This is a fantastic opportunity. I'm looking forward to this so much, so I hope to see you guys there. And Mike Binder, sir, thank you very much for the super chat. I see you there. Going to see a lot of red soon? Question mark. I think so, Mike. I don't know. I got to put an asterisk next to soon because I don't know how fast it's going to happen. But I'll be honest with you, I had a little bit of panic this morning, just a little bit, when I saw that article about how the Russian banks have still not yet been cut from SWIFT, that they've only advertised, that we've only had the headline, that SWIFT is saying, feel free to give us the names of those Russian banks any day now. So all of these moves in these last few days in markets, nothing has happened to the Russian banks yet. All this moves in the MOEX exchange, all these moves in the ruble. Still, none of these banks have actually been cut off yet, so nobody knows what's coming. I can't emphasize that enough, folks, that we don't yet know what's going to happen, and that the thing with the Russian banks, it still hasn't even started. Okay, so don't sit there and say, well, it's Tuesday, and this started Sunday night, and everything's fine. I guess I'm going to be okay. Don't be that guy. Don't get that complacency bias, that normalcy bias, and say, oh, it's something happening over there. It can't happen here. People said the same thing when the unfortunate health situation started overseas. They said, oh, it's over there. It's not going to come here. It couldn't happen here. We can handle it. Beware of that normalcy, that complacency bias, folks. All right, our minds have a way of getting settled into the way things are, and we resist the concept of things could ever be differently than they are now. Okay? Keep in mind, this comfort that we live in, this standard of living that we have, it's dependent on a very finely tuned, well-oiled machine with billions of moving parts all doing exactly what they're supposed to do. And that machine has been making noises for years now, and now they're throwing bombs at it in Europe. All right, so don't think it can't happen here. Don't think it can't spread here. Don't think we got any smarter than the last time war broke out or the last time there was a banking crisis. No, we have not got smarter. I guarantee you we have not gotten any smarter. If anything, we've gotten dumber because we printed money and got away with all the stupid stuff we did last time, so we did it twice as badly this time. All right, I'm getting fuddy. I think we're going to call it there, folks. I want to thank you guys for watching. Thank you. Don't forget, like and subscribe to my channel while you're here. Link in the description to the Dallas-Fort Worth event. Also, a big thank you to my Patreon supporters who are out there. Thank you guys very much for supporting the channel. And until next time, guys, live small and dream big.